following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
And welcome to the September 28th magnificent Monday edition of the Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to throw at us. Today, we're going to go look at the circumstances of the bulls and the bears, the buyers and the sellers, because they are throwing things at us. So you and I will go figure out what it is that they're doing. And absolutely grateful for your presence here. I'm here to serve you. So feel free to pick up that phone, dial on in at 877-927-6648. Of course, internationally, you can reach out to us at 727-445-1044. This is Magical and Magnificent Monday. Of course, it's none other than Tiger Financials Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading down 237 points. She's trading at 16,077. S&P down about 38 points at 1893. NASDAQ Composite off 111 at 4574. Russell 2000 off 27 points at 1095. The DAX closed down 204 points. The FTSE closed down 150 points. Gold is off 13 bucks. Silver's down 58 cents. Light sweet crude back $1.14. Natural gas up 3 cents right now. Leading the charge to the downside, yes, again, it is mostly, not all, but mostly pharmaceuticals. You have Priceline dollar-wise, that's off 43 bucks. Regeneron is off 40 bucks. Amazon's down 20. Allergan is down 24. The IBB itself off 17 bucks. AutoZone, which had been a high flyer, that thing had gapped up, right? Let me just check in on that, see if there's any island out there. It's off 10 bucks. No. It's a daily chart that we're looking at, so no, nothing out there. What AutoZone did, though, just as long as I've got the chart up on our screen, it made that nice 100% move, got back to the August 19th swing point, which had 190,000 shares. Really should have been able to bust it out because it did volume of 507,000 shares on the trading day of September 25th on Friday. Pulling back today, 178,000 shares. I think that the move to the upside likely not over for AutoZone, but that's not really where you and I want to spend our time focused on. I think the first place, we're going to take a look at short-term, and we're also going to go take a look at long-term meaning here, because the rest of this week, this is what, September 28th? So today and the next two trading sessions are muy importante to both you and I with regard to the message that the markets will provide to us for, quite frankly, the next 6, 7, 8, 9 months out here. And if it's not the end of September, well, then it'll be the end of October that we'll have to take a look at it. But first, what I want to do is take a look at, you know that when markets get stretched in any one direction or the other, you and I have certain tools that we can look at to identify kind of leading indicators. You and I can identify or help us understand whether or not the move is going to continue. I don't want to use the word real because all moves are real out there. What we're trying to understand is, hey, what's going on with the rubber band? So the first thing that I'm going to do is go down to what I'll call the shortest term time frame charts that you and I really need to be focused on or taking a look at. And if you're watching us on TigerTV, you can see what it is I'm showing you. If you're listening on the radio or your mobile device at TFNN.mobi, we're looking at a 30-minute chart for the S&P futures, the ES Mini. That's the top portion. That's the top panel. Bottom portion or bottom panel is the NQ out here. Now, from the highs, we'll call it the Janet Yellen highs at this stage, from the day where she gave out, where she came, not last Friday, but this is from back on the trading day of September 25th. From that high, if we just simply do our wave count on a 30-minute chart to the downside in the ES Mini and the NQ, you can see that we are now in a seventh wave to the downside. Doesn't have to work this way, but you want to be paying attention to those seventh wave moves because oftentimes they can mark where you would see a significant reversal. Now, In the case of the ES Mini out here, we might get the low that came in at 1 p.m. was 1878.75. The low right now 1878.75. So we may already be in that seventh wave. The same thing really inside of the NQ out here. So we wouldn't get a confirmation. The earliest confirmation would be as you and I are going off the air. So at about 3 or 4 minutes to 2, when I actually sign off, we'll make sure, remember to remind me, we'll go back and we'll take a look to see if, now, it doesn't have to end right now. Prices can continue moving lower, and this G count, this seventh wave, can continue moving to the downside as long as there's lower ticks underneath the current bar that we're on out here. But we are near a point where there could be a reversal. Now, when we say reversal, is it what kind of bottom is it? You don't really know. You don't know. You just, but I want you to be able to anticipate what's going on inside the market. And we're going to just start with our 30-minute chart. Now, we don't want to just stay with just those two, although they are very important. We're going to take a look at both the Dow and the Russell 2000. Now, in the case of the Dow futures, that's the upper portion of my screen, you can see it too is in a seventh wave move to the downside. Now, the Russell 2000, which is trading below the index, cash index is trading below its August 24th low out there. Remember last week when we were on the show together, what we said was, hey, many people are looking for the August 24th lows to get tested. We're looking for the August 24th lows to get blown away. Well, guess what? Inside the Dow cash index, not the Dow, but the Russell 2000, it's already trading below that level. Nonetheless, its brothers and sisters, the Dow futures, the ES Mini, the NQ, they all are in that potential step. Now, they have been moving down with strength. So there is no price relative strength divergent pattern, which would be the better setup, the combination of the two, to see a rather large rally, potentially large rally out of it. Because in those cases, prices either move into the upside or the downside with less energy, less force behind the move. And oftentimes those can lead to larger moves out there. We don't have that in place as we speak right now. Now, in addition to just getting that seventh wave, you really got to get a bullish reversal signal. Otherwise, it becomes a pretty tepid move. So that's what's going on ultra short term. If I were to show you what else is going on, okay, I will. If we take a look at, we go from 30 minutes and we multiply that times 10, and we go to the 300-minute chart, what you're going to see is inside the NQ, that Janet Yellen high out there, you can see that on a 5-hour chart, you can see that we're also in a seventh wave move to the downside. So we've got two inside, and the NASDAQ is really the, I believe, is one of the key, is probably the kingpin to this whole thing. It's not the Russell. The Russell's weak. The Russell's not going to just drag everything down, but the Russell is sending a message to us. Now, in the IWM, it's not trading below that swing point, but we'll go take a look at that most certainly. If we take a look at the ES Mini, the S&P futures contract, its 5-hour chart, it's actually stronger than the NASDAQ. Stronger than the NASDAQ from the standpoint of taking a look at that high that came in back on September 25th out here. And we take a look at the, we're only in 5 waves to the downside out there. Of course, all the way back here on the trading day of August 25th, you had that price relative strength divergent pattern out there. That led to a nice bounce to the upside. We've got to take a look. We always are going to take a look at both sides of the trade out here. Now, inside the Dow futures, we're going to go take a look and see where that's at. Also stronger than the NQ. So really, I think our focus, our message with regard to what the market wants to do for recycles to the downside, truly coming from the NQ out here. That being said, so we've taken a look at a 30-minute. We've taken a look at a 300-minute chart out here. Let's go take a look at some daily setups. Let's go take a look at the summation index inside the New York Stock Exchange to the downside. Again, continued follow through the downside. Nowhere near an overbought, oversold status out here. If we go ahead and blow this up on our screen, you've got the plus 150 level out here. That was hit back on September 17th as it made its high. In fact, I will tell you, if that high does not get taken out at any point in time on any bounce out here, what you can expect is lower price going into next February to April. That is the absolute setup out there, and that's the deal. Now, getting to minus 150, and we're only at a minus 136 out here. So if it gets to minus 150 by day's end, that's a doable thing. At the minus 150 level, that's where the NYSE gets into an extreme oversold status out here. So that is also something to keep in mind. That, when we take a look at some of those seventh wave moves out there, that helps you and I to be able to anticipate what's going on inside the market. We take a look at the NASDAQ composite. Its readings for overbought are plus 65 and oversold minus 65. You're down at the minus 50 level out here. So we don't have any kind of significant levels of it being oversold present at this moment inside the NASDAQ composite. Inside the Dow, back below the zero line out here. Inside the Dow, the key to be watching here for what it wants to do is going to be the low September 24th. Why the low there? That's a hammer candle. You know the expression better than I do. If you're long, you are wrong when price closes below a hammer candle. That says in the Dow Jones Industrial Index, the key level to be watching is 16,016. It's actually 16,016.36. You're at 16,051. The actual low thus far today, 16,038. So that is a key level to be watching. On Friday, just as a great example, on Friday, the Russell 2000, if we go take a look at it real quickly here, the Russell 2000, well, I wanted to take a look at it quickly. I can always take a look at it quickly. I'll show you that it also on September 24th, I believe it was the 24th, had created a hammer candle. Looks like a doji, smells like a doji. It was a doji hammer candle. Does that make any difference? No, not really. But that low was very important. And on Friday, just coming into the close, the Russell 2000 had gone ahead and closed below that. That said, hey, guess what? We're going to go test that August 24th level. You can see inside of it, it is trading below that area. It's trading at 1093 and change. The low on August 24th, the 24th. Actually, the low was on August 26th out here in it, 1102.57. So we took now. What other things could lead to a potential bounce? Who knows? Bounce bottom, decent bottom out here in the market. Well, one of those things would be the volatility index. If we take a look at the volatility index, this is the important chart for you to be watching. You can see right now it's priced out at 2680. Just look at the top line out here. Now, we can also see as a contango. You can see all of the other futures contracts here. The furthest one out is in 2016. It is June. So June 2016, the VIX index is priced at 2251. Even next month's contract is priced at $24. So you're looking at X marks the spot. November, yeah. So November's at $22. You've got October at 24. So, but what's really important, so that's not a normal setup out there. So that too is going to have to resolve itself. But if you take a look at the percentage of change here, plus 0.1389, 13.89%, if it closes above 10%, and those G's inside the 30-minute hold out there, and the Dow holds that hammer low, those are setups for at least a bounce. We're going to call, short-term bottoms out here. Look, and real key, we're going to go look at those long-term charts because those are the ones that are really important for you and I. This is Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back. Dow's off 1.5%. S&P's down a little over 2%. NASDAQ composite down 2 0.6%. Same with the NDX 100. New York Stock Exchange off 2%. What else to the big out here? So during that last segment, we're really taking a look at some different patterns on different time frame charts to help you and I identify what the market's next move is likely to be. We're also going to take a look at the longer term moves that are out there. But just to summarize, we took a look at the seventh wave counts inside the ES Mini, the NQ. I also believe inside the Dow futures out there. So that's important to pay attention to. We've taken a look at the VIX index, which right now has a one-day rate of change greater than 10%. You get greater than 10%, you have a 90% chance of a bounce or bottom within 24 hours out there. So that's something else to pay attention to. You also have a trend index reading out here. So if you take a look at it right now, it's at 2.28. I'm only concerned about the close. If the trend index is able to close a one-day closing of above 2 out there, you've got another 90% probability of a bounce or bottom that's in there. So just really trying to help you navigate the waters. Now, that's a one-day trend index reading. To a certain extent, as we speak today, it almost doesn't matter where that trend index reading is. And the reason is Stevie takes a look at, it's not a bad tool out there, but there's a better tool, or I believe that there's a better tool. And that better tool is taking a look at a 10-day trend or a 10-day arms reading out here. And if you take a look at our chart, Or take a look at the chart that I've got posted on my screen. The blue, at the very bottom panel, you'll see two blue horizontal lines out here. And those two blue horizontal lines are like an upper and a lower threshold. The red arrows that you see on my screen are when the 10-day arms reading. I've inverted it just to make it easier so that the bottoms lined up with bottoms and tops with tops and so forth. But when you take a look at it, the red arrows identify when the 10-day arms gets below that lower threshold, which it did last Friday. It actually got just slightly below it on Thursday, stayed below it, of course, on Friday out here. It's not going to get above it today, but when it does bounce above it, which could be tomorrow based on the other setups that we have out here, look, when you start to get down below that, you've got to start searching for even potential tradable, buyable bottoms. Trade this market in both directions out here. So this is suggesting, now there are some times where this pattern fails. It's not often. Those are the blue arrows that are on my chart out here. So if you take a look back here, you just take a look at the number of occurrences over the past 2 years out here. You're going to see like about you're going to see 3 failures, and I haven't counted them. I don't know. It's like 20 success stories out here. So you want to pay attention to this. We can turn off all the other scare BS before Steve stuff that's out there and just take a look at the pattern. So those are the patterns, and really what we're taking a look at here is more what I'll call short-term. It's absolutely short-term time frame to take a look at what the markets are doing. Now, let's go step over and take a look at the long-term, right? So we've got it all set on the short-term, on the daily, things of that sort. Now, we're going to go take a look at volumes and things of that sort during the bottom half of the hour on the way up. So we'll take a look at that, and we'll take a look at swing points. But at the moment, let's take a look at the bigger picture out here. Give me a moment to pull this up on my screen. And the bigger picture that you and I want to focus on, I'm going to pull up the New York Stock Exchange, because when we're taking a look at the 10-day arms, I'm using the New York Stock Exchange data on that, of course. And if we take a look at the NYSE, what it's clearly doing as of September 28th, I've got no idea what it's going to do tomorrow or the next day. But what you can see, let me blow this up on my screen here just a bit. You can see that we are now clearly below the rising trend line. That's the black diagonal line that's on my screen. It doesn't really matter where price is today. You might say, why are you even telling me this today? Look, it's to be able to take preparations, because if we get a close below that trend line, then that has a different meaning than if it gets rejected, right? You're up against a very important level of support. And when that level gets broken, the cool thing for both you and I, because we go back and we take a look at other time periods of other data. We go back in the 2000 time period and the 2007. You didn't have to call the top in order to have saved your assets, in order to have saved a lot of money. I'm not asking you to go short. I'm asking you to protect the thing that you work so hard for out there. And when we take a look at the prior times that this trend line has broken, but when I say broken, I mean a close below it, it's led to months and months and months of lower prices in the market. Where the market goes to, we can use Fibonacci numbers, all sorts of things out here. That's not so much what I'm interested in. I'm more interested, we're not really that far off the top. As we speak right now, we see a close. We see that we are trading below that rising trend line out there. That says you've got to be careful. So even on a bounce, that might take place tomorrow, Wednesday, who knows? Price has got to get above that trend line. Okay, so that's the New York Stock Exchange. You've got the same thing going on inside of the Dow. If we take a look at the Dow, there you go, same pattern. Now it's just slightly below. New York Stock Exchange always tells the better picture. This is Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pezzavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back. Dow's off 250. S&P is down 40 points. Let's take a look at a few other things out here. Let's go take a look at golds. We had that beautiful super full moon that I was only able to watch on television because of all the clouds. But as we take a look at Goldilocks, the chart that you're looking at on my screen right here, we really won't know for probably a day or two how this is going to resolve itself. But what gold actually has done today, we can go take a look at retracements as well, but it's also pulled right back to a level of support that it should have. If you take a look at the green and red line on my screen out here, it looks a little bit like Christmas. We take a look at it. The green is the 19-day. The red is the 39-day exponential moving averages out there. When they have a crossover, typically what will happen is whatever it is you're trading will pause. Just creates a pause in price. Now, when you've traded above that, as price has done, oftentimes that pause turns back into a pullback. Now, it does not necessarily have to pull back to those lines the following day or the day after. Sometimes it can take a little while to do that. In this case here, it's actually pulled back. So it's very key because we do know that gold broke through the descending trend line out here. It is now back below it, so we don't know if we've got a complete failure. My opinion is we don't know if we have a complete failure or not, because on one hand, price is actually doing what it should be doing. Now, if we see it close below 1127, we'll call it, then we've got problems in River City out there. And that trend line, we just have to look for the next area, the next buy point out here, because we still have commercial traders that have they are still believing that we're going to see a what appears to be, well, a rally in gold. To what extent, can't tell you. They don't tell me. I don't know. But at this stage, gold is actually doing what it should be doing out there. Silver is a whole different story. I'm not even going to go take a look at silver out here, because it's really more so, my opinion, it's what is Goldilocks doing, not so much what is silver doing. Let's take a look at, let's go take a look at volumes. Let's take a look at it in a number of different ways. Well, first, let's start off. Let's take a look at the QQQ series ETF. Let's go see what it is doing. Now, the Qs have got really a form of support, a baseline of support around 99, 98. We're not going to be exact right there, but it's the yellow line going across my screen. These are the levels that have held as support since about December of 2014. So it's been in place for a pretty decent period of time out here. Obviously, we broke through that on August 24th. If we take a look at volume today, light volume inside the QQQ series. Now, that's more bearish than it is bullish. If we had big volume today, you've only done 24 million shares. I think mathematically straight line, that says we do somewhere around 40 million shares. And that 40 million shares, shoot, the swing point that it's trading underneath right now, September 1st, had 73 million shares. So that already tells you one thing. You can say, and we are going to say, because it's the truth, you're testing a swing point with light volume out here. So any close back above 100.63, you're 100.54, you're going to have a failure on price and volume at a swing point. Can't bust them down, try to go bust them up. Where's the bust them up to? The bust them up could be just simply to the highs of Friday. It could even be as high as the September 18th high at the 106.60 level out here. But it would be a more of a bottoming pattern if you had big volume and you still rejected that low. I wouldn't even care if you rejected the low or not. But if you did more than 75 million shares today, that could set off a bottom. The Qs make bottoms with large volume. They do not make bottoms with light volume out here. Not that they can't bounce out of there, but that's not their pattern. And you just need to know their pattern. If we go take a look at the IWM, we know that the cash index is trading below its swing point. We can see the IWM looks like it has tested the level of 108.26. You've got 83 million shares. It's done 31 million right now. Looks like it's on pace to do around 49, 50 million. So 50 testing 83, the actual low. And because of dividends and so forth, it doesn't really have to get below that swing point. But nonetheless, it's done you that favor. It's traded to 108.23 versus 108.26. So it has at least done that. It's if you close above 108.26 today, the weak link out here, the IWM, would be giving you a failure on price and volume. So we're putting all this together with the one-day trend, with the one-day rate of change on the VIX, with a 10-day arms reading, a 10-day trend reading out there, with regard to wave counts in the 30-minute and the 5-hour charts out there. So really putting the full thing together for you so you understand what the markets are doing. And we also understand what they're doing on a long-term basis out here. So volume today, and the Q says we're not putting any major bottom. We got a nice little bounce out there, and then things ought to resume lower. In fact, I believe that the big wave down hasn't started. That probably doesn't start until towards the end of this week out here. But we'll take things one moment at a time out here. If we take a look at the SPY, we look at the SPY pulling back today with 85 million shares. That says we should do somewhere in the range of 140 million shares or so. Now, that is trading below September the 1st. And that's got 256 million shares. So light volume. The only thing we can say about the SPY out here, because, unless it gets back above 190.73, it ain't going to reject anything. It's also trading below the 0.618 retracement level out here. So in the case of the SPYs, all you and I can rely upon is going to be the ES Mini to give us any kind of indication as to what it wants to do. If we go take a look at the Dow Diamonds pulling back with, you name it, light volume out here. 6.2 million shares right now. Looks like it is going to do, well, it's going to do about 11 million shares. I take that back. No, I don't take that back. I can't take that back because it's a September 1st swing point that's got 14 million shares. Now, it has not tested the bottom of September 1st. Let's go see if the index itself did. Give me a moment here to see if it did. The Dow, let's go see if it's gotten below September 1st out here. September 1, let me just blow it up on my screen out here. September 1 has a no, it hasn't got below that. But you got this hammer candle out here inside the Dow, so that's really going to be the low. That's important to be focused on and paying attention. So we've got light volume in the 4 index ETFs out there. Now, what we probably ought to do is we probably ought to go take a look at, the thing that is pulling the NASDAQ down, which is off 123 points right now. That's down by some, what is the NASDAQ is off by, 2.6% out there. What we ought to do is we ought to go take a look at the top 10 holdings inside of the IBB, because the IBB, the biotech sector, is what's really pulling things down. So let's go see if you and I get a feel for what's going on inside there. So let's take a look. So the number one weighting inside IBB is Biogen. The top 10 are going to be Biogen, Gilead, Celgene, Amgen, Regeneron, Illumina. What the heck is this? It's not Alexander and Baldwin, ALXN. I don't know how that got in there. Alec Baldwin must have been inside my system when it last shut down. But it's Alexion Pharmaceuticals, Mylan, Vertex, and Insight out here. So let's go take a look at each of those. And by the way, those represent, let's see, 8, 16, 24, 32, 40, 47, 50. It's, I don't know, 60% or more of the IBB. Just take a look at those 10. So it's really important to see what those weighted stocks are doing. So in the case of Biogen, pulling back into, looks like it wants to test a low of 265, even Steven. That's got volume of 5.8 million shares. You've done 2.9 million shares. Let me do this. We're at 142. So we've been trading for 4 hours, a little over 4 hours. You've done 2.9 million shares. 47 is what it's estimated to do. What the heck? 2.9. 2.9, not 29. It's estimated to do about 4.7. So you got 4.7 going into 5.8. So it's pulling back on light volume. Ideally, BIIB, Biogen, would test that August 24th low out there to give you some type of indication that it's failed on price and volume. It's trading inside that swing point right now. You just know that it's pulling back on light volume. That's all that you know. Gilead Sciences, GILD. Let's go take a look at it. Looks like I need to. So it's back below the 0.618 retracement level. It's below its swing points out here. Let me get rid of that. The next area for Gilead to really get to, it looks like what Gilead wants to do is come back and test December 23rd, 2014. That was a high volume bar down there. There were 61 million shares, or 72 was the prior day. You could use the more conservative one. Look, you're pulling back on real light volume. We can see that the August 24th low came back and tested that area. I would anticipate that Gilead, just to try to put all this together, when a potential bounce inside the IBB could take place, Biogen testing that swing point low. In the case of Gilead, testing 93.50 and holding that level. That's 16+% of the IBB right there. If we go take a look at Celgene, CELG out here, we can see that it is trading right now at the 0.618 retracement level. So we know that. That can often be an area where you would see a reversal. Volume on it is 7.3 million shares, but its level of support is really down around 96.44. So it's nowhere, so the only thing it can go on Celgene is that it's made a 0.618 retracement of that off of that August 24th low to the, September 17th problem? Yeah, September 17th high out there. If that doesn't hold, anticipate 96.44 inside of Celgene. If we go take a look at Amgen out here, AMGN is a ticker symbol. What is it doing? Amgen trying to get back to a level of support that would take into that swing point here, all the way back on October 16, 2014. Now, the swing volume there is 7.9 million shares. You've done 4.2. The top of that swing which is what it could test, 130.88. It has not done that yet. The low so far today, 132.21. So we don't have any tests of important swing areas that we've seen so far, in my opinion, in the top four of the weightings inside the IBB. That's over 32%. That's like 33%. Let's add Regeneron, another 8% out there. Regeneron is very close to getting back to a level of support. Now that red line of 437.64, you got to give that a little bit of room here. So Regeneron is pulling back to an important level of support. There was a little bit of a breakout inside Regeneron back on the trading day of March 16th, 2015. But that had volume of 1.6. You've already done 1.6, so it needs to hold that 437-ish level. If it doesn't, it'll pull all the way back into this other breakout, which had larger volume, 2.4 million share in October of 2014. That's around the 360 area. That is on Regeneron. That takes care of 40% already. Illumina out here, ILMN. Illumina is testing an area that it broke out of. This is the first time that it's tested that level. That's in the 166 area. Today's done volume of 2.2 million shares. The breakout had volume of 3.6. So 2.2. We just make it 2.3. Let's make it harder. That says about 3.7 million shares versus 3.7. So it's actually coming back into a breakout area with a bit too much volume. But holding 166 would be a short-term positive for Illumina. Oh, by the way, if it doesn't hold that level, it'll come all the way back down into the low from October 15th, which is around the 145 area, and that is ILMN. Alexion Pharmaceuticals. This is Alec Baldwin's stock out here. No, just kidding. That is blowing through its swing point from all the way back here on May 6th. That had volume of 15 million shares. You're doing it with very light volume today. Nonetheless, you're trading below that. Says you can go lower. Where are you going to go to? That says 135.21 is likely where Alexion Pharmaceuticals is headed, and that is a breakout from the trading day of January in 2014. So you can see, if you can visually see and feel the damage that is being done out here inside this IBB. Mylan, if we take, this is a pretty cool chart here. This has got one of the largest island tops that you'll ever see. Well, I don't know about that you'll ever see, but my goodness, you want to talk about traveling past this is its own Gilligan's Island out here. Look at Mylan. Look, this stock here had a huge breakout on the trading day of April 8, 2015. It gaps up with about 51 million shares out here. Now, the prior day's high, just to give you an idea, you can't really see it that well. I wanted to go ahead and identify the actual area where that island top was. It gapped the high of the prior day, which was April 7th. The high of that was 59.74. The low of the next day, $60 even, Steven. So you got a little gap out there. Well, this thing gapped down. Somebody forgot to tell me, but this thing gapped down on July 27th. And, there's no more bearish reversal pattern out here, than Mylan out here. So you've got a big gap. Of course, we know that the IBB itself has got an island top out there. That island top, that took place here just between a few days, July 15th, really through July 23rd. Those are the passengers that are stranded out there inside the IBB. But Mylan does not look good at all. If we go take a look at Vertex Pharmaceuticals, that's off about $2.57. That's trading back, looks like, into an area of potential support at 98.80. That is a high volume bar from the trading day of June 24th, 2014. So if it does not hold that area, the Vertex is going to head down to about 84.47 out here. So that insight, okay, let's go ahead since it's out here, and we'll cover the top 10 for you. This is pulling back into an area where it broke out of. Well, now I can't. No. This is pulling back to the August 24th level. There was one point. Oh man, it's pulling back with too much volume. Not good. Volume, as an example, today 2.2 million shares versus August 24th, 1.8 million shares. So it looks like Insight is going to incite a battle down to the price level about $70. Looks like it's not done. Headed lower. Steve Rhodes, TFNN. Be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back. Had some requests to take a look at some of the mining stocks out here. The first one up on my screen is Freeport-McMoRan. Now, FCX is the ticker symbol. The top portion of my chart is the Australian dollar. I understand that who's in this? One of the big guys is supposedly in this. 8 or 9% is a Carl Icahn, maybe somebody like that. That's inside FCX. What Carl Icahn is doing if it's inside FCX, and the same thing for you if you're trading FCX. You are trading the Australian dollar. I don't care how you look at it. If you take a look at the top portion of my screen and the bottom portion of my screen out here, you can see that these two do the tango, as it should out here. If you take a look at what the Australian dollar is doing, it looked like the Aussie dollar was getting ready to bounce. It really needed to get above that 7.72 level, but that's where it ran into resistance out here. So that spells trouble for FCX. What I mean by that is, if I go back here, I think is it there? No, it's probably right here. Where do I have all my currency pairs? Probably should have done this ahead of time. I think it's right here. Yeah. So here's the Aussie dollar. Let's put this on a monthly chart out here, and you'll see what it is I'm looking at. So on a monthly chart for the Australian dollar, that green diagonal line out here, that comes off, that's a rising trend line off of the April 2001 low. That next touches the October 2008 area. See how we're trading below that? And we're coming into the end of the month out here. Any close below that, or let's call it 0.709, that is the 0.786 retracement, says that FCX is going to go ahead and take a trip on the reading. And the reading gets you down to 60 cents a Rooney out there. So if the Australian dollar is headed lower, so too will FCX. Those two walk step in tandem. Now, that's not the case with the other miners out there. Of course, you got to take a look at maybe their currencies where they are trading. But let's go take a look at Rand Gold out here. GOLD is the ticker symbol. If we take a look at it, you're still traded inside the breakout bar from September 24th. That broke out with 1.3 million shares. You're back with 535. So you're pulling back with light volume out here. It looks okay at this stage here. Hasn't broken down for sure. Might feel like it's broken down, but has not broken down. If we take a look at Agnico Eagle, really doing the same thing. Now, AEM has a confirmed, or had a confirmed, A to B equals CD to the upside. September 18th was its swing point that it took out. That had 4.5 million shares. Taken out with 6.5 as well as 4.6 on September 25th. But you can see it has pulled back today, 2.2 million shares. So it's pulling back on light volume. And now we've got a complex A to B equals CD to the upside should that repeat. Barrick Gold out here, ABX is the ticker symbol. Also pulling back on light volume. Made a high with 22 million shares on Friday. Pulls back today with 12 million shares out there. Last one that we'll take a look at is GG Gold Corp. Gold Corp, a weaker stock than the others. Looks like Gold Corp's going to make another trip to its July 24th swing point low at 1235. It is pulling back to that level with light volume, but it needs to test 1235, bounce off of that just to confirm that its bottom is forming. As far as the market, you got the Dow's off 270, S&P's down 44. Let's go back and check in on our 30-minute charts out here inside the Dow, inside the Russell 2000. You are still in, you've got a confirmed seventh wave inside the Dow. So that means the Dow closes below 15,933, and it just ticks below, not closes, just ticks below 15,933. That pattern recycles to the downside. But I really believe that it's more about this guy and this gal, and this being the ES Mini as well as the NQ. You can see they are still in their seventh wave. They can't possibly confirm now until 3 o'clock. 3 p.m. Stay tuned, folks. Our man David White is up next. Have a marvelous Monday. I look forward to seeing you on Turnaround Tuesday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.